So this week, YieldMax Group C will be going X. So let's just take a look at a couple of those. We're going to look at HOOY and CONY just to see where it sets at currently. And then we'll check for some supports and resistances for HOOY and CONY. Hello my friends, this is Legend. So this week, Group C will be going X, and I wanted to take a look at HOOY and CONY. I currently do not have HOOY, but it has been paying out pretty nice distributions, so I wanted to take a look at that and just see if we can tell a little bit about where it may be heading. And I wanted to take a look at CONY, as it too is in that group. Alright, so let's just take a look at HOOY first here. And you can see it's got a distribution of about 76.63%. And it utilizes the underlying of Robinhood. And HOOD, that is the ticker symbol for Robinhood. You can see the past distributions starting around the end of May. We're paying about $3.30, $6.50, $6.89, and our latest was $3.85. So it seems to kind of be teetering between that $3 to $6 range. So I'm thinking we'll probably end up getting something maybe a little bit above the $3 range, but less than the $6. HOOY has a net assets of $231 million. So it's still pretty small compared to a lot of the other ones, right? It's still in the millions, where a lot of them are in the billions now. But that number does fluctuate day by day. It's got the gross expense ratio of 0.99%, so it has the same ratio as MSTY does. That's interesting. So let's go over to the Webull chart and let's just check out to see where it sits. All right, so here we are on the Webull chart, and we're looking at HOOY right now. And as you can see, it looks like it originally came out around that $50 range, and it's currently at $67.45. So it has been moving up, even though the high at one point was above $77. But it has since been coming down a little bit. It's still above where it first started, but it looks like it's trying to level out a little bit. As you can see, it's hitting the high here and dropping down and hitting the low down here. So it may be trying to trade within this range, and we'll look at HOOD to see if that matches. And here we are on HOOD. And you can see here, I've got a support line and a little bit of a resistance line right here. I'm utilizing the highs here around this 1st of August area, as it was hitting around that 117 area. And you can see we did break up above it, but we never confirmed, right? We never confirmed above it, so therefore it came back down to our little comfy zone. And same way down here, right? It did break down below it, but it never confirmed and then moved back up. But it's funny how it got right back up to this same resistance area right here and just hit a brick wall right there, right? And the next day it did break up. It closed above it, but it still did not confirm, as a confirmation candle would be a candle living fully above, open and close, including the wicks, would be above that line. You can see it never gave a full candle above it before it pulled back down into that little comfy zone area here. Now this MA50 right here was this orange line. You can see that may be a bit of a support for it as well. If it does come down, it may come down close to about that 106, 107 area, and hopefully it can use that MA50 as a support, and it can just continually to move that on up. That would be great for HOOD, and therefore that would help push HOOY up as well. The momentum here is pretty flat. It's not really growing, it's not really decreasing, but it is somewhat parallel, right? It's parallel with that signal line. So it's just not sure what it's going to do. Kind of looks like it wants to kind of cross back down, but we may have to wait until tomorrow to see if it's going to keep decreasing on that green momentum and eventually move toward the red, or will it just bounce off of it and start moving on back up. So I think breaking this resistance line here at around that 117.69 area and getting a candle to live above that would be a very good sign to have HOOD moving on up. But of course, if it does come down, then we could be looking at a first support at this MA20 of about 108.88 in that area, right along with a support right underneath it at 106.21. And if it can use those as the supports, then it won't come back down to this 101 area. But if it does come down to this area, it's very possible that that RSI2 could dip below that 10, and it could be a potential good time to buy into HOOY. And let's just look at the Bollinger Band and let's just see where it sets. And here we are on the Bollinger Band, and I'll turn that MA back on. I know that's a lot of different lines right there, but I wanted to see this orange line here and this blue line because that's the MA20. This orange line is the MA50, and that MA20 is also the middle of the Bollinger Band. So we need it to break down below that, get it to this area down here, and then that RSI2 to drop below 10, and that could potentially be a good buy point for HOOD. Or if you're buying into HOOY, the graph is going to look almost identical. This is HOOY and that's HOOD, right? So you about can't even see a difference. The RSI2 is going to be very similar. HOOD is at 27.90 and HOOY is at 26.10. So, like I said, very similar. So if you're watching one, the other one almost looks identical. And that's why I don't mind really charting off of HOOY or the YieldMax ETF, because when you look at the underlying, it's almost identical. Especially if you're only looking for those buy points off of the indicators for each will look very similar. So for HOOY, my thought is if it drops down below that midpoint on that Bollinger Band, which is around that $65 area, so if it drops below that, it will be in the bottom half of that Bollinger Band. And if that RSI2 can drop below that 10, it could be a good potential buy for HOOY. But of course, that is not financial advice. That is only my thoughts looking at the graphs. So now let's take a look at CONY. And here we are on CONY. So let's see, can we figure out where some supports are and resistances? So first of all, I'm going to turn off the indicators, and that's just to help clean it up a little bit. I'm going to flip it to the actual chart. There we go. Now we're looking at the actual chart. And the reason I do the actual is because I'm going to be looking for resistances and supports. I need to know the real movements of the candles in order to do that. Now flipping between these two charts between CONY and COIN. First we have CONY, and then here's COIN. See, that's what I'm talking about. Not a whole lot of difference. Is it different? Sure, it is a little bit different. But if we were to draw our support lines here and resistance lines, and looking at COIN here, you can see we might have a little bit of a resistance right here where it did come up, and then we've come up and we've tested it again. Can we break past it? That's the question. But let's just go ahead and draw in a support line down here, and we'll put our support line right there. And you can see it is basically just trading right in this path, and this is our comfort zone. So if COIN can break up past around the 329.50 area, then hopefully we can start moving this one on back up. But if we do break down below the 292 area, then we could be dropping on down, back down to our next support line here, which is all the way down to 239. And whether COIN moves up or moves down, CONY will move that same direction. Because here on CONY, if I look, I can draw a little support line. We'll do it about right there across those tops. And then we'll draw our support line at about right there. So you can see it too is trading within this range. But if we do look at the underlying here of COIN, we can see we are toward the top of that resistance line. And if we can break past that, then CONY should continually to move up as well. Now for CONY, you can see I've got 245 shares and my average purchase price is $12.05. that does not take into account any distributions or anything. That is only my purchase share price, right? That is just my average purchase price. Now, of course, we also have ULTY that will be going X this week. And if we look at ULTY here, you can see that we had our support/resistance line right here because it was a support here until it broke down below it, and then it becomes a resistance line, right? And it kept testing it, and now it seems to have want to maybe have broke past it. Now, can we get a follow through on it? That would be key. If we can get a candle to stay above this line, then this can be our support line, and that would be great. We can hopefully start seeing ULTY move back up into the 570s range. That would be awesome. I currently have 150 shares at $5.66 as my purchase price average. I still have my buy order here just in case if it does drop out at some point at $5.30. We have been paid out the 9 cents for the last 3 payments, right? We've got 9 cents. Now before that we were getting 10 cents. That had been going on for quite a few payments, but I'm still good with 9 cents personally. If we can keep that 9 cents, that would be awesome. But we do need ULTY to continue to move up because we definitely don't want that share price here to continually move down. Because if it does, it will eventually affect that distribution payout amount. Because you think about it, if you're paying out, say 10 cents at a $6 range, do you think that you could pay out 10 cents if the stock price is of $1.50, right? The premium would not be there for a option with a strike price around $1.50, $2 or whatever. You're not going to get that kind of premium for it. You need that price up so that you can get the higher premium. So if we can get ULTY back in that 570s and then hopefully move it back into the $6 range, then we can hopefully see this distribution move back up to closer to that 10 cents. And that would be awesome. So I'm still excited about ULTY and CONY, and HOOY is not doing too shabby itself. It is basically up overall versus a lot of them, right? And CONY being one of them, right? Because you can see here, CONY was around that $20 range, and we're at $7.24 now. So it has been moving down for quite a while. But as I've said in my last video that I'll link right here, my purchase price is not my real price. My real price per share is taking into account the distributions I am earning because I am collecting my distributions. I'm reinvesting them into other stocks, but I am capturing my distributions so that I can get my capital back in these ETFs. Now, once I get it back, then I'll be free and clear. YieldMax will have paid me back my money to keep my shares, and then I will just earn the distributions on shares that I don't even have any capital invested into. And that's when it gets awesome. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button, smash the like button. It would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.